Hi guys, happy 2024, a new year. I hope you were rested. Jesse, I'm back. Last week I was not around, so I hope you enjoyed Rufus and Samson's episode. Today I come with a great gift to you. I hope you will learn one or two things. Um, Joe, maybe you can introduce yourself.
Yeah, sure. It sounds like a bit of pressure there, Jesse.
No pressure.
Yeah, cool. I'm Joe Neighbour. I work for Acuity Trading, and we provide a number of analytical tools for group users at EGM Securities, so FX Paysa and Equity. I've been personally in the financial markets for over 20 years in a variety of different roles. So initially started out as a stockbroker. Then I moved into trading and into research, and now I'm part of the Acuity Group, who are developing tools to try and enhance traders' journeys, try to educate traders, and really hopefully try and give something back to make trading more enjoyable and more successful for people, because it is a very tough business, as we know.
Interesting. That 20 years, we'll have to unpack it in bits.
Yeah.
First off, everyone has their own entry into this market.
Sure.
For you, maybe what was that spark that said, okay, finance is the thing, not going to maybe medicine or teaching or law?
So I always started working from quite a young age in the UK. So I was working in call centres, so I was used to speaking with people on the phone.
Yeah.
I was working at HSBC Bank, which is a global bank. They had an office near where I lived, which was on the phone collecting, basically, if people went overdrawn or just prompts to basically get their accounts back in credit.
Yeah.
So there's a lot of time spent on the phone from a very young age, and also from that time I got used to having a few pounds in my pocket. So the idea of going to university at that point and getting into lots of student debt and everything was not really something that I was overly interested in. I always had quite a strong work ethic.
Okay.
I wanted just to get out into the big wide world. And living where I do, which is around 50 minutes by train outside of London, the bright lights of London, a magnificent city.
Yeah.
Just the allure of going to such a place on a daily basis to try and learn.
It's a financial capital.
It's the financial capital of the world, so I was very lucky to have that on my doorstep. So I got a job working in the bank, actually, of the bank I was working at previously. I was working in a branch, and one day a gentleman came in, all very flashy, dressed in nice clothes, and nice big watch on his wrist.
Yes,
we started talking, and he seemed to take a shine to me. He really liked me. By this time I was 18 years old. And he actually said, "Joe, why don't you give this up and come and work with me?" So I was like, okay, that sounds like an interesting idea.
Yeah.
But at the time I was working in a big corporation, so in the UK it's very much you go and get a job, you work in a big corporation, you try and work your way all the way up to the top. So this was a bit of a riskier move because it was a very, very small company.
Yeah.
But it was an exciting one, and you've got to take risks in life.
Yeah.
So I did, and I went to go and work at a company selling equities to people that were interested. So this was very much on the phone. It was cold calling, which you're not allowed to do anymore, of course. But
something like boiler room in pursuit of happiness.
Yes, it was a little bit like that.
Okay.
And I quickly realised that what I was doing probably wasn't the path I wanted to take. So then I started looking around. Obviously, then had a little bit of experience in that industry, and then moved on to more reputable companies from that point.
Okay, interesting. Of course, most of our listeners are more or less retail CFD traders.
Yeah.
I don't know if you've ever been in that sector before.
I have, yeah. So I initially started working in the small cap arena. So we were selling smaller company investments.
Yeah.
In what's called AIM, the alternative investment market in the UK,
Yeah.
which is speculative investments. Obviously, you're buying them in a physical way, so there's no leverage or anything like that involved. And then just around the time of the financial crash in 2008, 2009,
Yeah.
so I was there to experience that as a young person, which was a really quick way of learning, the highs and lows of markets and how they can bring, really good times, but also bring really bad times as well. And just shortly after that was kind of the birth, I suppose, of retail CFD trading.
Yeah.
So we were really at the start of that, picking up the phones, and people were saying, what is this CFD? I'm interested in being able to go long of markets, but also go short of markets, because we were coming out of a bear market. So people wanted the ability to be able to make money in markets that go down as well as up.
Just basically hedging and making sure you're at least on.
They weren't there was some hedging, but there was also some outright speculation. So people were just selling the FTSE or the DAX, or just trying to make money from the big, wild, volatile swings in the market.
Interesting. From your analysis, maybe some of the things one would want to know. I was not quite old enough to understand what was happening in 2008.
That's why you haven't got as many grey hairs as I have.
But it is something I've come to study given my economics background.
Yeah.
How were you, let's say, when you talk to clients and even yourself, organizing your finances, how are you doing it in such a way that that it might happen again, given the way humans, we tend to repeat ourselves,
Indeed.
but also ensuring that yourself are secure plus your customers? What are some of the things that you would look at before investing in a particular asset class?
Yeah, so my primary background was in stocks. So I was kind of building portfolios as like a wealth manager, I suppose.
Yeah.
So obviously you want to be diversified for a start. You don't want to have too much concentration in certain assets. And within maybe stocks, you don't want to have too much investments in banks or mining shares or whatever it may be. So, the sort of basic premises of portfolio construction are to make sure that you're diversified.
Okay.
But also have a plan of where you want to get out of your investments. Everybody's very quick to get in, but ultimately it's the exit plan of how you're going to get out of these trades is the big thing that people need to spend more focus on, in my opinion.
Interesting that you mentioned that trading plan. It's one of the easiest thing to say, hardest thing to follow. Everyone says, okay, I'll be doing maybe risking 1%, 2%, or whichever amount, and exiting at this particular time. So when you are looking at the chart, be it FX, stocks, or everything, how did you, let's say, come to learn and settle with a, structure that is quite convenient by you, but also gives you some realistic and consistent returns?
So it takes a lot of time is the first thing I'd say, because as you're a trader, if you're trying to explore financial markets, you need to learn the hard way, unfortunately. We all have to take some losses along the way and understand, learn from mistakes ultimately, because we're all going to make them. We're all going to blow up an account. We've all done it plenty of times, but it's learning from those mistakes and then working on a plan that suits you. And everybody I see with trading plans, they tend to be very focused on the actual strategy, where I'm going to get in and where I'm going to get out, and they try and follow those rules. But I think a trading plan needs to be perhaps a lot more than that. It needs to kind of detail every single element of how you conduct yourself when trading. So you need to have documented your goals, what you're trying to achieve. You need to understand how you're going to deal with your emotions in certain circumstances. And that's not just losing money, that's also making money. How do you deal with your emotions when you're on a big winning streak and you've got lots of extra funds in your account? Does that emotionally mean you're going to start risking more because you think that you're doing very well?
You've mastered the market.
Exactly. There's lots and lots of things to focus on.
Which one do you think it's the hardest? When you are winning, to control yourself, or when you have lost a big one and now you're trying to come back in? Which one do you find it hard to navigate?
I think they're both equally hard, but I think losing is always the difficult one, because it hurts, right? You've got money on the line. Some people risk more than they can necessarily afford, and that creates all sorts of emotional struggle, and you start making very irrational decisions. If you've got some sort of trading plan and you've got some results that you've checked out previously, and you can see that typically, I can manage a 20% drawdown or a 30% drawdown and still recover. It's how you deal with being at that 29% of your 30% limit and thinking, do I continue to stick to the plan and go with this?
And the margin calls are coming in.
The margin calls are coming in. I mean, hopefully you never get in that position, but it's a really emotional game, and mastering that, it takes a very, very long time.
For me, I find when you have a good week or a good month, consistently beating the market is the hardest to control, because you are torn between two things. Do the next trade, do I go a bigger position? Or do I now start calling everything because it is following how you have been using the same strategies for the whole month. When I lose money, I'm like, yeah, I made a mistake here, so I should never do this again. But when I'm winning, I'm like, haha, now I need to make the killing. If I was making $1,000, now I need to think about 10K, and you want to hit it within. You start doing the calculation. Now you're more keen about the mathematics. Okay, so I made $100. This was the number of pips I used. Maybe one lot. If I had used 10 lots, I would have made a killing here.
Yeah.
So anyway, it's something that I've come to learn. When I'm winning a take now, I become more cautious.
Yeah.
But when I'm losing, I'm like, let this go. Hopefully, we will recover this mistake on the next refresher.
I agree. I mean, there's a few times in the past where I thought it's going very well, making good money, and you've got your resignation letter ready, written out. Right, I'm going to go and trade full time now.
Every trader's dream.
Yeah.
Make a killing, go buy a beachfront property,
Exactly.
and just wake up. You have your very nice orange juice, and you oversee the ocean, and then open your chart and everything.
That is the dream. There's a lot of people on Instagram that seem to be doing that. Whether or not it's true or not, I don't know.
I believe in London it should be the same, right? Now, when let's say up to now where you are at Acuity and you are doing all this research and trying to make trading a little bit easier for those who are coming in, and even experienced trader, when you don't have that time to scan all the charts, you just want to see some few ideas. What led you to say maybe now, with the 20 years experience, everything that the market has to offer, and the hills and portals and everything. What led you to that decision of now providing some technology and everything else?
So I don't know everything for sure.
Yeah, definitely.
Because I'm always learning. Markets always throw different things at you. COVID, for example, we saw that coming, and what it did to the markets, and the initial reaction, and then the bounce afterwards. So it's a continual learning experience. In terms of where I'm at now, ultimately, I'm not as skilled a trader as I can do it full time.
Okay.
I still have to earn an income. I've still got a mortgage to pay. I've still got 2 hungry kids to feed. So, I need to be kept interested. I think if I was to trade my own trading strategy, which I currently have at the moment, and it's very much adapted to around work life, I would be quite bored. I think if I was sat there all day long, just doing trades for 5 minutes in the morning and then.
So basically, you would not be those proponents of, going to trade full time.
I'd love to have the fun. Ultimately, the long-term goal is financial freedom for everybody. Yeah. So if I could get to a position where my mortgage was paid off, I could cover my bills every month, and then I was just playing around with
charts,
trading and charts, that would be a dream. But that's what we all want, right? And it
lasts 3 months.
Yeah.
3 months of looking at those candlesticks, and then you're like, I need to do something.
Yeah.
You mentioned something about emotional control and everything. COVID came, of course, from your side, there was Brexit as well. I remember those days, the markets were choppy as hell.
Yeah.
You'd wake up in the morning, you see pound is up. By the time London is open, pound is down. How have you learned to overcome or, manage your emotions during such unexpected events in the markets?
So I think my approach now is almost very robotic. I don't trade using algorithms or any automated fashion, but I just kind of wake up with the same sort of set of rules every day and just apply them. If there is a huge event that's making markets too volatile, I'll probably just step aside. And that's one of the things I've learned, is that I don't feel now that I have to trade every day. I'm quite happy to look at a chart and think, you know what, there's nothing there for me today. And that's something that's taken a long time, because before I was always looking for a trade. There was always something to do.
Any dollar that comes in is welcome.
Exactly. But, I always say this when I speak to people. I ask them, I say, so Jesse, how many trades do you think it takes to blow up an account?
One.
Exactly. It takes one trade.
Yeah.
One bad trade and you're gone.
Yeah. One, and the one which you hold and hope it will come around.
Exactly.
And the reds keep growing and everything. So I agree with you. And in terms of anticipating this high impact event, it means that you must also set aside. There's those traders who say, if my margin reaches a certain level, I don't think it's good for my strategy. And you said you trade robotics. So are you part of those? If you have less amount than this, you are better off holding off until the margin is back up, or how do you approach it?
So I never really tend to stress my margin too much, to be honest. I mean, I am classified as a professional trader from a regulatory point of view because of obviously the experience that I've got in the industry and the qualifications that I have. But I would never really stress my margin to the point where that was too much of a concern for me, to be honest. But I know, that's not a luxury that everybody has because they want to be able to trade as if they have more capital in their account. But of course, then that brings significantly more risks as well.
Definitely. Now, we have talked about, of course, the aspect of setting up your trade, the plan and everything, the end goal of it all, the performance. Do you normally set a goal each time you enter a trade, or a certain price level when, let's say, Nasdaq hits 18K and I've held it from around 15K, or it is more about risk, percentage? Do you use percentage value as a measure of success, or the money side of it?
So I think if you focus on the P&L, I think that is one of the triggers for me personally from an emotional point of view that can be an undoing for me. So if I'm continually focusing on getting my account to a certain figure monetary wise, then that's taken over my thinking rather than actually sticking to the plan. So in terms of goal setting, long term, as we've spoken, everybody wants financial freedom. That would be, of course, the ultimate goal. But my goals, I think, are a lot more short term. Just from a day-to-day perspective, rule number one: don't blow up your account. that's part of my thinking, and I think with the trading plan that I have, if I lose more than 5% in a week, then that's me. I've just got to shut down the systems and stop and rethink because. I know something's not right, or I'm not in the right frame of mind, or things aren't working for me. So having those rules as part of your trading plan is when to cut off, when to take a step back, when to stop trading. So really my goals are very short term, because I think if you focus on those short term goals, which is managing risk, not making mistakes, how many times I've done it in the past myself, you might enter the wrong lot size into your trading account, and all of a sudden you've got this huge position on, you think, oh, okay, I'll just wait for it to come back a couple of pips, and it doesn't. So I think minimizing risk, minimizing mistakes, really aggressive risk management. So not suffering any kind of drawdown or loss against you. And I think if you focus on the short-term goals, then ultimately the long-term goal will look after itself.
That's a good advice, because I think most traders want to, you want to make $1 million within a day, instead of thinking to make $1 million over 10 years period, which is more sustainable, and it doesn't bother you. Sometimes you might even not see your chart or everything 2 days because you're focusing on other stuff, and it allows you to be able, the longevity of your margin makes you, at least when you see an opportunity, you can jump in without really worrying about it.
That's a great point. I mean, in the presentation that I'm doing tomorrow for the VIP community for FX Beza, there is a little thing I bring up in there about thinking longer term. So I use a compound calculator, which I just found on the internet, and just a very simple calculation that if you started off with $1,000 in your account and you make 2% a month on your trading account, so everybody wants to make 50, 100% a month. But if you just say 2%, just a very small number, and you can compound your returns over a 20-year period, you could potentially turn that 1,000 into $500,000. Because you're a young guy, I'm youngish, I think.
You're young.
Thank you. But I could be trading for the next 20, 30 years. So why would I just focus on what I want to achieve next week if I can continually do this for the next 30 years? If it only takes me a small amount of time, if I've got my plan locked in, I just wake up, I look at the charts. If there's something I like, I'll place a limit. If not, I'll just wait. And there might be some months where you might make 10%, or there might be some months where you lose 6%. But if you can maybe focus on a 1 or 2% increase in your account, I know it sounds tiny, but over a long period of time, it really adds up. And of course, if you've got a winning strategy and you're making money, then why not start adding more money into the account? So if you've got $1,000 in your account and over a period of 6 months you've been profitable, say, okay, well, I'm going to start adding another $50 into that account every month, or whatever you can afford out of your monthly salary.
Normally the dollar cost average philosophy. Interesting that you bring that short term versus long term. there is this strategy, the scalping and the swing trading.
Yeah.
Have you tried either of them?
I've tried them all. I've tried everything.
Which one have you found to be punishing to your account?
Scalping is brutal, I think, because you're just looking for tiny little rewards for taking on sometimes really, really big risk. I spoke to you about this morning. Can I say it?
Say it.
Yeah. So it's an older analogy that's used, and I've heard it in London when I was very young, first starting in this industry, that there's plenty of traders out there that will take very, very small profits, and they may take them very consistently. They may have a very high win rate, but when they take a loss, it's a massive loss. And how they phrase that, or how it's phrased, is you eat like a bird, so you're eating tiny little profits, but when you shit, it's like an elephant. And that is catastrophic. You can have a 90% win rate over 100 trades, but one trade could just absolutely kill you. So, yeah, scalping is definitely not for me.
I agree with you. I think I've tried it maybe 2 years ago, NFP Fridays, CPI Wednesdays. You try it once, you make a killing, you feel like, I think I've come around this market. Try the next NFP.
No two events are the same.
No way. You go to the weekend mad at yourself. Why did I have to do this?
And then you've got to live with that over the weekend. Yeah. If it's on a Friday.
The sad thing is you have made a lot of money the entire week and you told yourself, I'm just building this margin for Friday so that within that period of time, 3:30 to 4 p.m., I'm able to kill the market and then I'm done for the weekend. Only for the markets to kill you and be done with you. I think those are some of the lessons young traders would want to learn. How long would you say it takes, at least in the current modern age where we have a lot of information, we have a lot of trading tools and everything, should take maybe a serious trader for this case to learn how to set up a trading plan?
So I think obviously we all have to go through that initial learning phase.
Yeah.
We all have to understand what it is we're getting involved in. We see, the influencers around and the people that, our friends are saying, I'm making a bit of money doing this. So we have to dip our toe into the water to find out what it's all about. And then if you get that bug, if you think there is an opportunity here for me, then you're going to go on a learning journey to find out more. And you're going to experiment with 10, 20, 30 different types of strategies. You're going to try and apply every single indicator that you can that's available to you in your trading platform. And you're eventually hopefully going to settle on something that works for you, but it's going to take, it depends how much time you've got available. If you're working and you're just researching this kind of thing in the evenings or before work, then it's obviously going to take longer. But to go from being a novice trader to someone who's sort of semi-serious, I think you have to show some level of commitment there as well, and that's going to take maybe 12 to 18 months.
Interesting. When you say, strategies and everything, there is the other aspect of trading itself, brokerage. So everyone, obviously, I don't know about the situation in UK, but in Kenya, every trader I know has tried every broker possible you can ever find.
Yeah.
And for me, how I choose a broker that I will work with are two very simple things. How easy can I access my money back? And is the product they are offering, what are the cost margins for it? The other things may not really matter, but those two, how it doesn't affect my position is what I don't know how it is in London.
So regulation is very strict in London by the FCA, and leverage is very small. I think it's 50 to 1.
Okay.
So that's why we can't get in positions where we've got huge amounts of leverage, which is a good thing. I mean, years ago, you could leverage as much as you wanted, and it caused all sorts of damage to many people.
Okay.
So in terms of selecting a brokerage, absolutely the first one is, can I get my money back? That's rule number one.
Yeah.
So a regulated entity, I think, would always be preference.
Very important, yeah.
And of course, there's lots of different regulations now that you can take advantage of, and some are more strict than others. So FCA, I would say, are probably up there as number one. I think Australia have kind of followed suit as well. The Dubai regulator is fairly new, but they seem to be trying to do things in the right way.
Yeah.
Who are you guys regulated by here?
Capital Markets Authority of Kenya.
Okay.
Very strict as well.
Good.
I mean, it's been 5 years of legislation with continuous review. So I think it's growing. I mean, FX Pesa was the first to sort of lay the ground.
Yeah.
And you see what we're having now is more or less not just offering you the ability to trade, make your dollars and go home, but also how can you compare with others, because information in this industry back then was very expensive. I remember when I was starting, like you, I started in the stock market, local stock market, but the local stock market, Nairobi Securities Exchange, is not as big as LSE. So the return there was taking a lot of years for you to feel, and you are young, so you need that thrill of, I can take a little risk for bigger return, as opposed to yourself, maybe you want to take a comfortable risk that does not affect your, mortgage and everything
Of course,
else.
yeah.
So they are trying. I think they may not be as strict as FCA, because the leverage was up to 1 to 400 still.
Yeah.
So maybe that is the major difference.
So I think some of the particularly in the UK, there's a compensation scheme. So if you ever feel like you've been missold or anything, or there's capital protection. So if the broker were to fail, as I've seen a few times before. So we had MF Global, which was a big London broker, which failed, and all the customers' money was stuck there. We saw it with World Spreads, I think, as well, around the financial crisis, and there's been others along the way. So in that instance, you want to make sure that there is some sort of protection in place for you in the event of something happening, because they can be the best broker in the world. MF Global were considered huge, safe, but again, it's one trade. You get in trouble and anything can happen.
Yeah. Very interesting that you say that. From stock trading to obviously now exploring gold, crypto, what are some of the criteria you look for before you enter into asset classes that are quite new to you, but you hear or you see people making killing from it?
Yeah, so the cryptocurrency one was very interesting, because that got to the point where, me being involved in finance for a long time, I had friends and acquaintances who then started telling me about cryptocurrency, and obviously I knew about it, but I was always quite skeptical initially, and then it's getting all this momentum behind it, and I never really got involved because I kind of understand the cycles of euphorias and how people get very excited about these things. And there's an old saying that if the taxi driver's giving you a tip on something, then that's the time to sell it. Because ultimately the guys that are in the know, the guys that are clever, that were involved in the initial move of it getting higher, they're already getting out when that guy in the taxi is telling you, this is what you need to buy.
Is it the same? Do you feel like it's the same now? Because you were there during the 2008 crisis when the big Lehman Brothers fell, and even recently we have seen, of course, this bank from Switzerland. What is it? The Credit Suisse fell. Do you feel like, being 14 years now, I believe, 14 years now, Bitcoin has been here, or crypto basically has been here. Does it feel like something which the euphoria is almost dying, or it's something yet to be fully, exploited?
I think it will come back. I think there's so many enthusiastic people out there about that as an asset class, and I can really see the long-term benefits of digital exchanges, and I think that's where we will see things go eventually. I think really what's holding it back is just that regulation thing. I think if that can get sorted, then I think it's a serious asset class, and it's going to really potentially kick on from there.
Do you feel like it can be a threat to the mainstream, for those who have us who follow maybe the Ben Graham rule of, buy low and hold forever in the Buffett way, or it will complement, in terms of diversification?
Yeah, I don't think anything's a hold forever. Things change, right? So yeah, I think it will be another asset class for people to diversify into, and who knows, maybe eventually all currency will be some form of digital exchange, but it will be kind of government backed.
Yeah, interesting. Now there is a question I get a lot, and I'm sure you've gotten it a lot and applied it yourself as a trader. Indicators. How many indicators did you use before you decided to have a chart which is plain?
Again, all of them. So I studied at the Society of Technical Analysts in London. Got a diploma. That's kind of how I initially got into doing the technical analysis side of things, and I'm passionate about it. I absolutely love looking at charts all day long. I love the data. I love the moving parts and spotting patterns. And of course, I've experimented with absolutely every indicator. But now my usage of indicators is very basic. It's really sort of shrunk down to one or two, maybe. I think the one I'd probably use most is average true range, because I think by using average true range, I can sort of understand the volatility of the market at any one particular time. If the average range is really large, then I know that markets are a lot more volatile, and I need to be a bit more cautious with setting stops and limits.
Yeah.
And obviously, if it's very narrow, then I know that it's there's not a lot going on, and I can be a little bit more refined with entries and stops. I do like classical patterns, so I like looking for head and shoulders, double tops, double bottoms. These are the kind of patterns that I would look for. But in terms of indicators, probably ATR and maybe a couple of moving averages.
Yeah, I guess the syllabus is the same. You go through the same phase. You fill your charts, and there's somebody who told me, I opened my computer and then he saw my chart. He told me, that's a cobweb. Now remove everything so that you can see the trend in the chart. And I think every trader, you are fascinated. I mean, those indicators are amazing to look at, Ichimoku, cloud, and all those things. But at the end of the day, is it giving you when to enter the markets, perhaps, or even a clear signal of what to do in the markets?
Yeah, I think just very simple support and resistance level are as effective now as they've probably ever been. I think you've just got to kind of stick to that and keep it kind of basic. I mean, one guy I very respect very highly in the UK, almost like a mentor to me, is a guy called Clive. If he's ever asked about what do you think is the best indicator, his answer is always the same: price. That's the only indicator that he needs. Is just what is the price doing.
Yeah. Now, you come from UK, whereby, I mean, politics there is literally important and has a significant impact on the markets. How often do you pay attention to politics across from Asia to United States in regards to how you position your trades?
So my trading, I would say, is very much intraday now. I kind of never really want to hold any position overnight. Okay. So that's one of my kind of risk mitigation tools, if you like. Things can happen overnight. I've held trades overnight before, and there's been big events overnight in Asia or whatever it may be, and it's absolutely killed my position because I'm not there to watch it or not following the news. So now I tend to only focus on the time that I can spend at the screen and try and kind of monitor my positions throughout that period. In terms of following it, I work for Acuity Trading. We have a really big news offering. So we are using AI, and we're using natural language processing to actually take all of the news that's in the market at the moment and derive scores from that. So I can actually find out from the news whether or not there is underlying bullish or bearish sentiment towards particular assets, and that's really, really useful. But of course, when it comes to who's moving the markets, we always need to keep an eye on what's happening with the US, because they're in an election cycle at the moment. Looks like Mr. Trump may have a chance at getting back in, and he was very good for the markets last time.
Yeah, he was.
And very exciting and interesting, but at the same time quite scary.
We usually say the markets are amoral, so they're not excited about the policies he will put, but they're excited about the bottom line of their balance sheet. So whatever he does doesn't matter, but how he affects the Wall Street, that is, unfortunately, that's how market players think.
Well, if you think with the US dollar as well and how pivotal that is in the global system, of course, every commodity is priced in US dollars, all the cryptos are priced in US dollars. We've got all of the obviously major US equities, and the S&P 500 and the NASDAQ, the size of the companies in those indices, I think the top 7 alone controls pretty much most of the index in terms of how it moves. So we need to be across those as well.
Yeah, you mentioned earlier artificial intelligence and obviously algorithmic trading. And I like the part where you said you trade like a robot, but you don't employ algorithms. Have you ever tried using a bot yourself?
Yes.
What was the experience?
So the bots are great while they're working until they don't, because ultimately I don't think there's any kind of system that works indefinitely. So they always require tweaking, and you're always a little bit nervous about watching it to make sure that it's doing what it should be doing.
Okay.
And again, how do you come up with these? How can I program an algorithm to spot a support or resistance, which is very subjective to what I'm seeing?
Yeah.
That's what the difficulty I found, is that it had to be very mathematic based, in that I'm looking for some sort of indicator to rely on, and that's where it didn't really work for me, if I'm honest.
It's a lot of hard work where you can do it and be content with whatever you get.
Yeah.
Artificial intelligence itself has been, I think, It is the talk of the town now. Literally every company on the earnings call, they mention it like 100 times. Do you feel, in terms of trading right now, it is something that can be of value to traders or can impact the markets? You know,
Yeah, I think it will have an effect. I mean, ultimately, the reasons prices move the way that they do is because of human emotion, because of fear, greed, all the standard sort of emotions that we go through. And you can follow the cycles again and again, the boom and the bust cycles, the euphoria, the depression, the expectancy. So ultimately, I think it's human emotion that's driving, the supply and demand of the markets. And will an artificial intelligence robot be able to understand that in the same way? I don't know. Potentially. I mean, it's scary and interesting at the same time.
perhaps maybe the volumes they put in the market that can be the trigger to maybe people now following the trend or something like that. Interesting. You mentioned your mentor being Clive. I don't know, what are some of the books you have read that have led to you becoming maybe a better trader, a better investor, and a better participant in the markets?
So I've read many. I've got a huge collection of trading books at home. And when I first got on this path of trading and understanding markets, I was just reading all the time. Listening to audiobooks now more so because I'm lazy. But one book, I mean, there's so many. I mean, the Market Wizard books, I think, are always a fascinating read for somebody that's new to the markets. And there's obviously the standard Market Wizard books that we have, but then there's new versions of it, hedge fund Market Wizards, and the ones that nobody knows about. And they've got some really fascinating strategies of how they operate in the markets. But I think Methods of a Wall Street Trader by Vic, I can't remember what it's, Trader Vic. That was really good. In fact, what I'll do is I'll find a list for you and you can put them in the comments below.
Definitely. That would be awesome for our traders. Maybe to young traders, what are some of the advice or guidance you would be giving them to ensure that they don't give up on the first blowing account and they understand that it's just part of the game?
Just, I think, try and get rich slowly, I think would be the key advice. If you're young, yes, you can take risks. Because ultimately you'll be able to fight another day, you'll be able to continue working and replenish your accounts. But if you just really focus on managing risk and trying to grow your account over a 20, 30 year period, as opposed to trying to get rich in the next couple of weeks, I think you stand much more chance of success. And I think ultimately it comes down to learning, right?
Yeah.
Yes, you have to do the hard lessons that we all have to do in financial markets, because you are going to lose money. But I think you just need to continue to practice and read and listen to as much information as you possibly can.
I usually have this philosophy: every trade I enter, I'm willing to lose a certain amount of money. So when I've set my risk already, I'm not looking at how much I'll make. I'm looking at how much I'm willing to lose.
Yes.
It makes me, like I said, robotic. Whatever happens, happens. I already made my call, my analysis, and based on how I've been trading, it has been doing well. So if it does bad this time round, it's just 1 out of 10.
That's absolutely the best way to do it.
Yeah. How do you keep yourself, educated, always educated in terms of trading and financial markets, but more importantly, adapting to how things are changing? Because you can imagine last year we were in the circle of rate hikes, until there was a little war, a big war happening in Middle East again. I think we ended the year with the Red Sea crisis, and this year we have probably something else that will coming up. How do you keep yourself, adaptable and always, learning?
Well, I'm very fortunate that I work within this industry, in that, I'd like to think my finger's kind of always on the pulse. I'm always having to oversee what our analysts are doing, have to get involved in doing the analysis myself, have to write various reports for various different market participants, brokerages, fund managers, etc. So by doing that, it means that I'm in a privileged position that it's almost my job to find out that information. So I'm always kind of, on it, if you like, and finding out what's happening. But in terms of further education, always interested in reading various different bits and, understanding how different people do different things. I think when it comes to maybe devising something like your own strategy, one of the best things I found was there's so many people on the internet that are coming up with various different strategies. And what I would say is look at them all. I would say don't get sucked into necessarily all of them or any of them, but feel free to steal ideas from various different places and then add your own spin on them, because there's nothing wrong with that. It's just taking a good idea and refining it to suit you.
I normally say, so long as your strategy is making money, who am I to tell you
Absolutely.
you're wrong?
Yeah.
Yeah, definitely. As we come to the end, maybe what would be your, say, outlook for 2024? I know 2024, besides the Trump election and everything, most of us are excited if you participated in the last term when he was in office. What would you be looking at this year to, make or break the bank?
So I'm actually quite optimistic about 2024. We had an internal call at the company just before Christmas, and everybody was asked, "What's your view on how 2024 is going to play out?" And there was a lot of negativity around the table. Everybody saying, "I think it's going to get worse. It's going to get worse." Which, for me, I think we've gone through this rate hike cycle.
Yeah.
We are starting to see some signs of inflation slowing. I know the number was higher last week.
Yeah.
But ultimately, it's on a downward trajectory. And I think once we get to that point where inflation isn't so much of an issue, then we can start seeing potentially rates starting to come down, which is going to free up more dollars in people's pockets.
Yeah.
If they've got surplus cash, then they're going to be looking to put it to work. And eventually that's going to find its way into financial markets, I think, in the same way it did around COVID,
I think after we are almost done with the COVID hangover, I think it ended last year when everything was literally still recovering. I think 2024 is one of those years where now it's like 2014. Things are starting to sort of kick off when tech started literally hitting record highs annually. And if the things are going the way we have seen the year start with the earnings call, at least beating Tesla, beating the other things up, I'm positive about the year. Of course, you still need to manage your risk as well.
Of course, anything can happen, and there's obviously things that are going on globally which could impact the markets at any given point. Obviously, we've got the conflicts that are going on in the Middle East and in Ukraine and Russia, and obviously we've got the election in the US, which potentially could throw up some surprises. We've also got an election in the UK as well, which domestically will obviously be a big thing for us as well.
Oh yeah, for those who trade FTSE 100.
FTSE and sterling.
Yeah, definitely. As you wrap up, maybe your parting short words of wisdom to our listeners.
Oh, no pressure there. Well, I just think ultimately it's a learning curve, right? You've got to take your time. You've got to practice. Nothing comes easy in life. If anybody's telling you about making thousands and thousands of dollars or percentages in your account, you need to think a bit more realistically about it. In order to become the master of something, you need to spend a significant amount of time doing it. There's the 10,000 hour rule, which we've all heard of. In order to master something or to be considered an expert, you need to spend a significant amount of time doing it. And it's never been easier to do that because, whereas before when I was learning, I had to read books and use a bit of the internet. Now there's so much content available, so you can just have it in your headphones, you can have it on your phone on the way to work. So just continually be learning and educating and taking notes, and ultimately the main thing is just focus on risk.
Yeah. Thank you very much, Joe. I think I've learned one or two things. Always good to refresh your mind. And I hope to our listeners, that is the first of many great interviews we'll be having. Perhaps next time we'll talk about 208 specifically, for those who are not there, at least to elaborate maybe how, because in Kenya, being a third world country, to say at the time, it didn't really trickle down to this side, the mortgages, people getting, kicked out and everything, assets being repossessed. But of course, it is something that as we continue to grow as a global village, you might want to know what happened in because if you don't study the history, you are bound to unfortunately repeat it. So I know we'll definitely have one of these before. Thank you very much for joining us.
It's been an absolute pleasure, and I've really enjoyed it.
All right.
So far in Kenya, I've been greeted by some wonderful people.
Yeah.
Very, very hospitable, very happy people, and I'm looking forward to a couple of more days here.
Definitely, we are having a very big community of traders growing. I think right now it's more about now East Africa than just Kenya. The community is becoming more or less with social media. I mean, you can talk to anyone. You share a chat, you find yourself having so even you trade. Interesting, very interesting. So you walk about with your neighbor. Maybe you have an MT4, MT5. So I also trade. Interesting. So
That's
I think maybe in a couple of maybe years, it might be similar to London as the financial hub of Kenya. But We'll see.
I hope so. I mean, I can see there's enthusiasm.
Yeah, definitely.
Definitely. Inquisitiveness in the conversations that I've had today. So, yeah, I'm really, hoping that you guys can do that. And I fully believe that.
With the Acuity, I mean, the signals and everything should be a boost and, make it easier for them to at least navigate with it.
Indeed.
Hey guys, on today's Bullish Banter episode, I was joined by a special guest who has significant experience in the markets that I believe would be valuable to you. Covered, of course, what he does for a living, how he started in the market, some of the gems and principles he has applied to ensure that he's able to, grow to achieve his financial freedom. Some of the materials he has used to at least educate himself, his risk profile, his strategy, and AOB. I hope you'll get to enjoy this.
Hi, I'm Joe Neighbour from Acuity Trading.
Yeah, tune in.